ones that we got. Cheers to the wish you were here, but you're not. Cause the drinks bring back all the memories of everything we've been through. Toast to the ones here today. Toast to the ones that we lost on the way. Cause the drinks bring back all the memories, and the memories bring back you. There's a time that I remember when I didn't.
So let's just say, for argument's sake, is we opened a trade, and it doesn't matter which direction we opened it, but let's just say we opened a buy trade, for example, for 0.01 lots, and we set our take profit target at this line for 10 pips, for argument's sake. Now, there are two things that can happen. The first thing is it can either hit our take profit target, which is great, which is what we want it to do, or price can move against us. Now, traditionally, the way I trade and the way that 99% of traders trade is that we would have a stop loss in place, right? So it would hit our stop loss, and then we would go in and look for another trade set up, and then place another trade. This is where the zone recovery trading system or money management strategy comes into place. So when price goes against you by a given amount, let's just say it goes against us by 10 pips, and we had a 1-to-1 kind of situation going on over here. What it does, instead of closing out trade number one, it opens a hedge trade with a larger lot size, which in this case we'll just say it doubles at 0.02, and what it does, it creates a new take profit target to the downside. Now, so we've got two open trades. One trade that was a buy that has gone against us at 0.01 lots, and then we've now opened a sell trade for a higher lot size, so 0.02 lots, with a new take profit target. And what we've now created is what they call the recovery zone, or the recovery window, or the recovery box. So this element here has a 10-point gap between it, and what we want to do is price to break out of either one of these two sides. And again, so if we follow the logic, now there's two things that can happen here. The first thing is it can either continue to go down and hit that take profit target. And if it does hit that take profit target, it will close out trade 1 and trade 2 in a profit. And the reason why it's in a profit is because the second trade, i.e. the sell trade, was at a higher lot size, and therefore the gain it's made has offset the loss of what the buy trade has done, and therefore when you close out both trades, it will close at an overall profit. So that's one scenario what could happen. The second thing you could do, it could then start to reverse again and start going back up to the entry of the first trade. Now, if the entry of the first trade has been hit, what it does then, it then creates or opens another trade in the buy direction, so the original direction of the first trade, again at a higher lot size. And again, I've just gone with the martingale approach. I'm sure a lot of you have heard of it. It's a gambling kind of betting strategy of where every time you quote unquote lose, you kind of double your bet size. And I understand the kind of problems and challenges with the martingale strategy, but this is just for visualization purposes and an approach, so you guys can conceptualize this. And again, so in this stage is now we've now got 3 trades open. We've got 2 buy trades at 0.01 lots and 0.04 lots, and we have 1 sell trade at 0.02 lots. So the first trade is back at break even. The second trade is now at a loss, and the third trade is just open, so it's at its break-even point. Now, again, what we're looking for, we are looking now for the market to break now to the upside to get out of this box window. So again, there's 2 things that can happen. It can either hit the take profit target, and if it does hit the take profit target, trade 1, trade 2, and trade 3 will all close with an accumulated profit. So therefore, we will close out the cycle in this scenario, and then we'll look again to go place that initial first trade again. Or what it could do, it could again go against us again, and therefore it could go back to where the trade 2 had opened, and then what it will do, it will then open another trade at, again, an increased lot size of 0.08 lots. So in this scenario at the moment, we now have trade 1 and trade 3 in a loss, trade 2 and trade 4 at break even. So, and again, this cycle again continues. So then you can either hit the take profit target, then all 4 trades will close out at a profit, or it can continue. And this is basically how the zone recovery system works. Now, you must be thinking, how on earth am I going to place all these orders, these buys, these sells, and all at the right time, all at the right lot sizes, and all these kind of different things. So I did think that when I was going to go through this kind of journey,